Hi everyone, it's Niall at LearnToTradeTheMarket.com bringing you another quality trading setup video. I'd like to welcome all the new members to the free videos. We've had at least 500 new members join over the last 2 weeks. So welcome aboard. Hope you'll get a lot out of these videos and then move on to the trading course and further your trading education. So let's have a look at today's setup. I'm actually short the euro dollar and I'll show you why. Today we're going to be talking about confluence of horizontal levels. This is the support and resistance, the static levels in the market, how to draw them, and then actually use price action signals to get you into trades. What I've done on this trade is use the daily chart, my anchor chart, to define the levels. I've then zoomed into the hourly chart and found an entry, and I've set up a stop loss and a take profit order of 3 to 1. So I'm looking to make 3 times my risk on this trade, and I'll now map out the trade for you. We can see here the top of this large trading band is at 130.60 to 130.80. This horizontal level through the top of the chart you can see is relevant on several occasions, and on the 4th attempt now we're still failing to break through. That's telling us this is valid resistance through here. Very simple but often overlooked in the market is these horizontal levels, so don't forget to draw your lines. There's obviously lines on the bottom of each candle, and you can see yesterday's low at 129.35 would become a support level. It's a very short-term support level, but if you're not drawing the horizontal lines, you can't line up the relevant areas, and you'll see that a lot of the highs and lows of bars do line up with areas. So that's that part of the strategy. Now let's zoom in. Okay, this trade's actually coming away nicely now. I'm up 1 times my risk. Let's have a look at what got me into this setup. Now I've already identified at the top of the chart the resistance. That's a given. That's an obvious area of containment for the market. We had an uptrend, short-term uptrend, moving prices up into resistance. The buyers have run out of steam. The bearish sellers have come in and started to hammer this thing right here at the 130.60 level. So we know the sellers are in control. We've now also got a signal in the market. This bar here I call the hammer reversal bar, the bearish rejection bar, pin bar, whatever you want to call it. It is a large saw candle. It stands out amongst this entire chart as something very obvious. What I do when I see this setup form at a valid resistance point, I'm looking for the market to then follow through to lower levels and retest the most relevant horizontal level. Now we've got 129.35 down here. This is the recent low. That's the simplest way to look at an hourly chart when we've got this ranging market going on at the moment and the horizontal levels are being respected. Now how I traded this, I took a market entry around 130.30. I actually got 130.33. It did bounce a little bit for me. Now if I've got an entry there, the signal is invalid if we move back above the high. So our stop loss to protect our capital is just above the high. Now let's say that's a 45 point stop loss or 40 point stop. Let's actually work that out. The high there was 130.64 and the entry was say 130.30. It's around 34 points, so let's just say 40 points to be safe. In trading we have to make at least 2 times our risk, preferably 3 times our risk or more to be in front, because our win rate's going to be under 50%. Professional traders don't have a high win rate. We need our risk reward to be higher. So when we trade in this manner, we have the 40 point stop and then we look to make a multiplier of that. So let's look for 40 points, 80 points, 120 points profit. So it's a measure of our risk. If we were to hit this area here, we could move to break even and lock in a free trade. So if we come down to plus 40 through here, we have got a free trade. We can then run the trade into these next target areas. So the second area here at 129.35 is plus 80. That's 2 times our risk. Now I don't know many Forex traders out there that would argue with 2 times, 3 times their risk. That means you've really only got to have a strike rate of 30% or more. And that's very achievable with these price action signals. Okay, so just to recap the 1 hour chart here, I've shorted at 130.33, got my stop above the high. We've actually made now 1 times our risk. We've come down to this area. I'm going to move to break even, so that's a free trade now. If we move up into this area, I get stopped out. If we continue lower towards this area here at 129.35, yesterday's lows, looking at a 3-to-1 winner. That's really as simple as it gets with my trading. I like to just place a stop, place the target, obviously move to a break-even stop as soon as possible, and wake up in the morning because it's time to go to bed in about 2 hours for me in Australia, and hopefully I've got a profit. If you'd like to learn more, you can check out my trading course at www.learntotradethemarket.com. There's the link. Any questions, send me an email. Look forward to seeing you in the members section and on the trading forum. We'll see you in the next video. Good trading. Take care.